Okay, where is my line? So these are the file that I'm using. So look at it. The number in the very first 1, 2, 3, 4, 5, 6, 7, 8, 7. Those are those are the one that in order how I'm going to talk about it. Very first one is tax reference guide. The tax reference guide is for 2019. Even though we're right now in 2020, for IRAs and SEP IRAs, we need to do it in 2019 because you're filing tax for 2019. We're going to go over this really quickly. IRA and pension plan limits. IRA contribution limit is a maximum is up to 7,000 if you're 50 and older. If you're under 50, that's 6,000, either 6,000 or 7,000. You do not have to match the full amount. You can do 2,000, you can do 1,000, you can do 500, depends on the company. But for IRS, you can do as much as you want up to that amount, 7,000 or 6,000. We talked about phase out. If you're participating in 401k or group retirement plan, there is a phase out. The spousal IRA, there's a phase out also. So, and the SEP IRA is up to 25%, $56,000. All right, that's how much tax deduction you can deduct. I think everything else is related to something else. So very first thing I did this morning is I talked about, I know that you guys already know about this, but let's do a little bit of math here. Okay. What does tax deduction means? That's what I'm gonna do today, right now. Oh, come on. Let's say, let's make it a little bigger so that you can see. All right, let's say your income. Hey, what happened here? Here's your income. Let's say your income is $70,000. And your tax rate, let's say is 25%. I'm throwing just in any number. All right. So this is just a hypothetical, purely hypothetical. So how much is the tax? It's a 7,000 times 25%. So tax due, I'm making it very simple. I'm simplifying this. This is a little bit more complicated than this. So if in the 70, let's say it is a 70,000 with a 25% efficient tax rate, we're looking at you owe IRS 17,500. That's a tax is due. Now, what if you have IRA, and let's say you're putting it to $7,000. Now, what's gonna happen on that 7,000 because of this 7,000 is that your taxable income is no longer 70,000. It is 70,000 minus 7,000. It's a $63,000. Now, more than likely, your tax rate will also, your efficient tax rate will also decrease, right? So your tax rate, let's say, is 22% after this. So your total tax due is a 22% of $63,000. So by doing IRA, your tax savings will be 17,000 minus 13,000. So you're saving 3,640. We all understand how this tax deduction works, right? Any question on this? You guys all know what I done, right?
Yes.
Okay, so there's a difference between tax deduction and tax credit. Tax deduction is not tax credit. So IRA is deducting your income. Your IRA will make your income taxable income lower by the contribution. So you're no longer paying tax on 70,000. You're paying tax on 63,000 if you open up an IRA. Okay, there's a tax savings. That's a portion that we all need to understand. All right. So with that understanding, let's go back here. Let's make it. I'm not gonna quit it now. We might want to come back here. So going back to tax reference guide, this will tell you how much deduction, maximum deduction you can have. Now go to number 2. This is how you report your tax deduction. I just realized that they changed the format. They just introduced a new schedule 1. The 1040 has a new look. It's all the deduction is on schedule 1. So schedule 1, you'll see, hey, you have 1040 and here's additional income. Here's a taxable refund and all that. Alimony is received and all that is information. Business income, schedule C incomes, and rental incomes here, farm income. And one thing that I want people to understand is unemployment income. Some of you probably receive this unemployment benefit. It is also taxable next year, okay? And other income, you put it there. These are the more likely positive. These are the negative. This is the adjustment. This will reduce your taxable income. The educator risk expenses, certain business expenses, health savings account, moving expenses for Army people, self-employment tax for those of you who filing Schedule C, and SEP and simple IRA. Some of you may wonder why this is here. It should not be on the Schedule C. It should be on Schedule C if that amount is for your employees. But if that amount is for yourself, amount that is applying for yourself should come here if you're filing Schedule C. If you're if you don't file Schedule C, if you're self-employee, not the self-employee, if you have incorporate yourself and you have your S or C corporation and you're drawing payrolls, it doesn't come here. It stays on the business tax return. But if you are Schedule C, it comes back here. We all understand that, right? And the health insurance premium comes here. But if your group is providing group health insurance, it will be staying on the business tax return also. And penalties on all withdrawals of savings, alimonies are paid, social security number, and IRA deduction. This is where you put down IRA. In our example, we put down 6,000 into contribution. This is where it goes. If it is 7,000, you put down 7,000. Student loan deduction, tuition and things, and here are the total adjustments. So this is where it goes. So just in case you're wondering how are you gonna claim, obviously it's not something that you will do. We're not a tax accountant. This is something that client will take it to their tax preparation person, but I thought that it would be good that we know what we're looking at and we know what we're talking about. Sometimes it gives you better understanding of how this IRAs and qualified plan work. Okay, any question on this?
Fine. Just just personal one, but alimony is like taxable, right? As you
Alimony is a taxable if it is an
yeah,
income, but if
yeah.
you're paying it, it's a deduction for you.
No, I heard Trump changed the law, so cannot deduct alimony from the tax. That's what I heard.
Okay. Here is says Alimony paid.
It's kind of, I don't know. I just tax filed yesterday, and then.
I know. Well, see, maybe that's something that you should talk to your tax advisor. So
Right. Yeah, because Trump mentioned it. Trump said no more alimony tax deductible. What they said. So
all right. So now let's go to the next one. So let's stick with the IRAs because I'm not an expert on those kind of things. I just want you to know what it is we're looking at in terms of SEP and regular traditional IRA. So this will tell you a little bit about how the deduction works. Now let's look into how we're gonna set up an IRA practically. How do we set up an IRA? What's the paperwork? What is the paperwork involved in setting up an IRA? You guys all know that, right? All we need is annuity application. If you have a security license, mutual fund application. If you are selling variable annuity, you need a variable annuity application. If you're setting up an IRA in a bank, you just need a bank application. That's all you need. So for us, most likely we're going to talk about annuity application. So I just pick one application, which is ANICO. By the way, if you haven't noticed, you get the most commission when you're selling ANICO. Okay. And so here's the annuity, ANICO's annuity commission application. Here's an owner. Normally IRAs, you can only do individual. So you put down all this information. And joint owner, can we put joint owner on the qualified plan like IRAs and SEP IRA?
no.
No, you cannot. There's no joint owner. Even if it is a spouse, a spouse cannot be the joint owner unless it's a non-qualified. Since we're sticking with the IRAs and SEP IRAs, there should be no joint owner. Annuitants. Can we have a different annuitants on the IRA application? The answer is no. Here it says if IRA or TSA, the owner and annuitant must be the same person. So you don't put down anything on here either. But if it is a non-qualified annuity, it could be different. But for IRAs and SEP IRAs, owner and annuitants are the same. And beneficiary can be anyone. So you want to make sure that you put down the beneficiary information here. And you put down the products, and here's what you say. If you want to do IRA, you put down IRA. If you want to do SEP, you put down SEP, right? If you want to do Roth, you put down Roth. If the spouse passed away and your client is opening up an inherited IRA, they can do it here. So this is all there's to it. In terms of application, there is no other application, no other form. So this is all there's to it. I mean, SEP, there's another form, but you don't even have to file. We're going to talk about that also. So we put down IRA in our application, qualify, if it is not qualified. So you do qualify IRA. And funding option, you want to make sure contribution in this year. So contribution in 2019. What if you don't put down tax year? What if you don't put down tax year?
It'll be 2020.
It'll be 2020. Is that going to be a problem?
Yes.
There is no problem. I'm gonna show you that also, but it creates a little nuances, and then you may not like it, but it should be a problem because it's up to the client's discretionary discretion to apply the contribution toward 2019 or 2020. But it is clean cut if you record that the same way as how you're gonna apply. So it is always a good idea to put on tax year 2019. But if not, you don't have to worry about it. Sometimes you have to call them and things like that. And I'm gonna go over that soon. All right. So if you want to do 2019 tax year, you wanna make sure that you put on 2019. What I also do is that I put on 2019 tax year 2019 on a check also. If you're sending a check, on the memo section, put down 2019 tax year. That's always a good option, a good idea. Unless you want to do 2020. If you want to do 2020, obviously change the number to 2020. So a lot of times you don't do rollover or transfer, so you're doing contribution for 2019, and you're putting money, so cash with the application, and you put down 7,000 or 6,000, whatever the amount is. So these are the place where you put down rollover and things. So total expected premium is 7,000, right? And if it's a flexible premium and things, I mean, I'm not going to go over this entire application, and that's it. You're done setting up IRA. That's how you set up an IRA. All there is to it. This is all there is to it. There's nothing more. And you just let the client, let your CPA know that you have contributed to 2019 IRA. How long do you have until? The money has to be going in by July 15th. Can we do it? Can we file extension on tax and contributed the IRA to 2019? Well, here's what I mean. Can you put the money in August 15 and apply that toward 2019?
No.
No, there's no extension with the IRA. I'm jumping ahead, but if you do SEP IRA,
You can.
you can. You have to know the difference. SEP IRA, yes. Traditional IRA, no. Traditional IRA, there is no extension on tax filing date. Okay? So even if you're filing tax, you file extension, you want to make sure you send in your IRA contribution before July 15. Okay? I mean, normally it's April 15, but because of the COVID, it is delayed by 3 months. Right? Any question here? Do we have a question on the how to set up an IRA with the application?
No.
No? Let's move on to the next one. Tomo, do we have a question?
Fine.
All right, everything's okay, right? Chisato?
Everything's fine.
All right. Masako's awfully quiet. Is she sleeping?
No, I'm awake.
All right. Mrs. T, you have a question?
No, I'm okay.
All right, I thought you had a question. So let's move on to the next one. Number 4, 5305 SEP. Now, when you're setting up a SEP, IRA, how would this application be different? Let's go back here. If you're setting up a SEP, this is true with every other application. I just pick on Enico because it is easier to for me to really pick up, right? If you do SEP IRA, you do SEP IRA and get rid of IRA, right? And contribution 2019, cash with the application. What's the maximum you can do with the SEP for 2019? $54,000. 54,000 or 25% of your payroll, whichever is less. So you can put more than traditional IRA in most cases. What if you're self-employee, then you don't get tax payroll, but you file tax Schedule C. If you're filing Schedule C, it is a 20% of your Schedule C net profit. That's how much you can put in. That's a maximum. Or $54,000 as before. Okay, so that's how you do it. I mean, you don't have to do 54,000, and sometimes your income doesn't allow you to do 54,000. You can do 20,000 or 2,000 for that matter. Whatever it is, right? Now, here's a question. Here's a tricky question. Can you open SEP and IRA together in one account or two accounts? Can you do SEP IRA and traditional IRA at the same given year?
I think there was a question the other day, and the answer was yes.
Yes, you can do SEP and traditional IRA together. So if you're self-employed and if you own a business, or if you're working for a company that has a SEP IRA, you can still set up an IRA also. Okay. This is a lot easier than 401k. I don't believe there is a phase out on this either. So you can do SEP IRAs and IRA. Okay.
And you get your double deduction?
Double deduction. And sometimes, I don't know whether Enico does it. I think Enico does it too. You can open up SEP IRA and IRA in a one policy.
Really?
Yeah. Make sure that you, if that situation comes in, let me know. I don't think you have to open up two separate ones. I believe I've done that before. You can do SEP and IRA in a one account. Okay.
So you have to tell them how much is going to IRA and how much is going to SEP.
Once again, it's not you it's not the company who's reporting it. See, all the insurance companies, which I'm going to talk about later, all the insurance companies reporting is a total amount that they have received.
Oh, okay.
So, I mean, I guess you need to tell them. I guess it's not going to hurt. You need to call, let them know. So I will write a letter. I mean, I want to make everything all clear. So I would write a note somewhere and saying, hey, out of $20,000 I sent in, 15,000 is from SEP and 5,000 is from traditional IRA. You can, but we need to check. Some company will not allow it. Some company allows both IRA and SEP or in the same accounts. I mean, if not, that's not the case. It's no biggie. You can have two separate accounts. I personally like to have a two separate account. It makes life a lot easier.
Yeah.
Okay.
And it's up to CPA to do the calculation, everything.
Right. Okay. Any questions so far? So this is how you set up with SEP. Is there any other paperwork that involved with the SEP? Yes, there is. But that paperwork is not required. Here's what I mean. Client need to write another application that is not an application from insurance company. It is actually called 5305, tax form 5305 from IRS. You need to have this form ready. I think I showed this form before. Here's 5305 -SEP, and the last revision is December 2004. Now here's what it says. Do not file with the Internal Revenue Service. There is this form, but you don't file this with your tax return. Then what's the use? This form will be distributed to all eligible employees. You should give this form to, or the owner has to give this form to all eligible employees, and they should keep a copy. When IRS requests, you need to, upon their request, you need to show them this, but you don't send this up form to anyone. How about insurance company? How about mutual fund company? Do they ask for 5305? Once in a while, I seen a company ask for 5305. Normally it's a mutual fund company. I never seen life insurance company with a fixed annuity and fixed index annuity asking for 5305. It is a good idea to keep a copy, but you don't have to. So this is the form. Once again, it's only given to who? Eligible employees. And the employer needs to keep a copy of it. Guess what? I always get the client's signature and keep a copy myself. Because when they need this form, guess who they're gonna ask? They're gonna ask you as an agent. They're not gonna remember you told them that, hey, you need to keep a copy. It's always a good idea to keep this copy in the client file. So so this is not something that you give it to IRS. This is not something, a lot of times you don't have to give it to any insurance company, but you do need to give this to, by law, you do need to give to all eligible employees in your company. Let's call Thomas Liquor, once again. And let's say he is incorporated.
Okay, okay.
All right. Now we put on the company name. Okay. I mean, what if? Here's a question also. What if Tomo doesn't have a liquor store? He's an insurance agent and he does not have a business permit, and that means he does not have DBA. Then we're gonna have to say Tomo. What is your last name again?
Hey, yeah, that's fine, Yamada.
Yamada, right? I was right. Tomomochi Yamada. So that's what the Schedule C says, that's what you put down. If you have a DBA, you put down Thomas Funtime Incorporated. Right? So whatever the name that you're gonna put in. Now, here's what it said. The employer agrees and so on and so forth. So who's filling out this section? Employer. Very first one is that all employees who are at least how many years old? 21 years is the maximum. So if Tomo wants all of his employees who's older than 18 to participate in SEP IRA, he can put down 18. He's saying that I want to minimize it. I don't want any young people to participate in. Who's going to pay into it? On the eligible employee, Tomo's the one who's paying for it. So he want to minimize the number. So a lot of times he put down maximum 21. Anyone who's under 21 does Tomo need to include him in SEP IRA? No. Right? So Tomo is the one who is in control. Let's say Tomo has son. His son is 20 years old and he's working with Tomo and he wants to include his son. He can put down 20. So who decides this number? The owner. Owner decide. Right? And here's the next one. Employer, at least how many years of service? The maximum is 3 years. Let's say Tomo's son been with him for 2 years. He want to include him on the SEP IRA. He can put down 2 years. Once he put down 2 years, anyone who worked with Tomo for more than 2 years is now eligible. Okay. And let's say he has somebody who worked there for 2 years and he doesn't want to include him and he says, hey, I want to do 3 years. Then he does not have to include anyone who's worked less than 3 years for his company. Now, what about his son who's been with him for 2 years? Can we include him? No. Rules are uniformly applied. So it is same for everyone. So let's say you said, I want to do everyone who's been with me for 1 year. One way to look at this is that look at this as a Christmas bonus. I mean, you don't have to do you don't have to contribute every year. And what if you said, hey, if you've been with me for more than 2 years and we have a good business here, I'll put the money in your business, your retirement account. And you have the right of ownership from day one. It can be the bonus. And as you're doing that, what's happening is that there is no payroll tax involved because this is employee benefit. It's not a payroll, right? So we can do that. So once again, it can be 0 to 3. So if he put down 3 years, anybody who worked with Tomo for more than 3 years can participate in SEP IRA. If he's saying that, hey, if you work with me for more than 1 year, you're gonna have a retirement plan. And I'm gonna, you don't have to put the money in. I'll put the money in as the owner of the company, but only when we have a profit. If we don't have profit, we're not gonna put the money in. But it's not only you who's not gonna have it. I cannot put money in myself. Here's something else. If you decide to put 20% of salary into this SEP IRA, everyone will get 20%. If you decide to do 10%, everyone get 10%, no matter who that is. If owner gets 10%, all eligible employee gets 10%. If employee gets 0%, the owner gets 0%. Do we need to keep up with the same percentage every year? No, you do not. Even if you do it this year, you don't have to do it next year. Any questions so far?
Fine.
All right, the next one is, should we include collective bargaining people? So any employees who who belongs to union, the owner decide whether to include these people or not. A lot of times they don't include them because they have a collective bargaining, meaning a lot of times it's a union, they get more benefit anyway, right? So who gets to choose all this? The client. Okay. And include or does not include certain non-resident aliens. What it means is that I think what it more than likely what it means is that if that person is not living here in the United States, if they're working off-site, let's say you have an office in Japan and you have a worker who works in Japan, should you include that person for SEP IRA or not? And you have as an owner, Tomo has right to make a decision. And so you said, okay, I want to minimize it. It does not include certain non-resident alien. Okay, I think that's my understanding. I thought it was a green card related, but when last time I spoke with an equal personnel, and it's more or less of the site rather than the visa type. It may be different now, but that's the answer that I received. So total compensation is up to 450, so it's not even matters. So you put that like that. And then who signs it here? Who signed here? He signed it here.
Employer.
Employer. So Tomo would sign it and put on his name and title and give to who?
Himself.
Himself and all
You.
eligible employees. And as an agent, you want to make sure you get the copy too. Any question on 5305? So, I mean, it's not that difficult as the training goes. Sometimes people get a little confused after training, but that's all it takes. Now we're done setting up simple IRA. I mean, SEP IRA. And this and the application and money, that's all we need. Now let's move on to the frequently asked question about SEP. This is the printout that I got from IRS.gov. I normally go to IRS.gov for when you guys ask me a question. A lot of times I go to the IRS.gov to confirm my answer and things. So who can establish? We talk about 5305 right here, and self-employed. By the way, what is a SEP? What does SEP stands for? Self-employed. I think it's Simplified Employee Pension. I think that's what it stands for. All right. I think it's a simplified employee.
Yes.
All right. And is there a deadline to the setting up the SEP? You can set up a SEP plan for a year as late as a due date, including extension. This is IRS. So once again, SEP IRA, you can have tax extension, extend your contributing of SEP. So even after July 15, you can still put money in SEP. Here's another question. If I have a SEP, can I also have another retirement plan? You can maintain both SEP and another plan. So you can open up IRA and SEP IRA together. You can have 401k and SEP IRA together if it is from two different employers. Okay. However, unless the other plan is also SEP, you cannot use Form 5305. So can I set up SEP for my self-employment income if participating my employer's retirement plan? Yes. So if you're working for somebody and you're participating in their 401k plan, on the side, you have a self-employment, you have your own business, you can still open up a SEP. So SEP is a very, very simple. Okay. Can each partner is in partnership manage a separate SEP plan? So no, only an employer can maintain, contribute to SEP plan for his employees. So only the employer can put the money in. The money is not coming from the employee, money is coming from the employer, the company. Do I need to update my SEP plan? It is my responsibility to ensure got up to date. So once in a while, you may want to change it. You can change it, but you need to make sure that you use 5305 once again. All right. Can we have different financial institute for SEP IRA? Let's say you got 5 employees and one employee wants to use a variable annuity. The other employee wants to use fixed annuity, and the other employee wants to use stock. Can we do that? The answer is yes. I have a client who uses my client's employee uses Prudential variable annuity for his SEP, and my client who's a little bit older uses fixed index annuity. So you can do both. Okay. So, but although the law does not require each participant SEP IRA to be the same financial institution, the institution that offer or administer SEP may require to deposit SEP contribution to at the same location. I mean, I never seen anyone like that. So you can open up SEP in any different organization. And guess who owns the SEP IRA? Who owns the SEP IRA? Does anyone know? No, it does. It is not owned by employer. Employer only contributes to it. It is owned by the employee. So your employee is the owner. They're the one who's signing the annuity application. Even though 5305 is signed by the employer, actual annuity application is signed by each employee. There's no place for employer to sign on the application itself, unless employer is doing it for himself. Okay? Any question?
Fine.
All right. 5480, what is it? 5498. This is the form that insurance company or financial institute send it to IRS when they receive money from the client. I think they're sending it in May, and this is the form that they show. They send it to IRS. This is for 2020. So if you put the money into IRA, this is where you put down IRA contribution for 2020. Let's say client sent us $6,000. I cannot write it in here. Okay. And he put down 6,000 here, and it is for 2020. Is there a problem? That's a question that it's been come up a lot of time. Here's the SEP contribution. Here's IRA contribution. So things like that, and they're sending this to IRS. Very first question that we need to ask is that should the client submit 5498 when he's filing tax return? The answer is no. It is for his records, and he does not need to submit it. As a matter of fact, there's no place to submit it along with his tax return. But going back to the question, what if the financial institute quoted as a 2020, the payment that the client made in February, and client is deducting it for 2019 tax return? Is there going to be a problem? Here's the answer from Lafayette, and this is true for everyone. His statement is correct. This is me. I'm saying custodian don't know what year the client's taking the deduction for, so the correct reporting should be done on client's tax return. Just make sure the client keeps a good record if even ever question by IRS. If IRS saying that, hey, I got 54.8 saying that it's on 2020, but you deducted not on 2020, but 2019 tax return. I never seen that happen. Even if it happens, who's making decision on the contribution that was made between January 1st to April 15th? For this year, is July 15th? It's the client. Even if there's a discrepancy on the 5498 and the client's checkbook, it doesn't matter. Who's making a decision? The client. All right. This is a little more technical than I wanted to, but if you understand, I think you will have a easier to explain this to the client. That's why I decided to do this. Once again, if you don't know, you can always reach out to me and I'll tell you. And if there's a need, get me involved in communicating with your clients. If that client cannot speak English and he is more fluent with Japanese, then talk to somebody like Albert or Kay or anybody. We can help each other out. All right.